Welcome to the Captain's Blog. I am David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated on Wall Street and make it understandable to you on Main Street. There was some panic last week, and it wasn't about the market. Where's the blog? Where's the captain? I was at a conference powered by Trilogy. And I will say this, the decision to merge, to partner with Trilogy was an exceptional decision, if I do say so myself. Advanced planning, client-centric planning is exactly what we were doing at Flagship, and it was confirmed, it was affirmed out there at the conference. So thank you, Trilogy. So I digress. The market down 1.5% for the month, the worst November since 2008. What's going on? The labor market continues to be weak. Will the Fed or will they not cut interest rates? And again, you out there as the consumer, starting to be more picky. Lower end retailers benefiting. Home Depots, Lowe's, not so much. You're more cautious where it comes to big ticket items. Was this the buy the dip week? Or was it time to take the week off? Here's your week in review. So as I just mentioned, where it comes to the big ticket items and the big purchases, you're more cautious out there. Why? It's the labor market. Will you have a job? Can you afford these big ticket items? Layoffs right now, the unemployment rate is at a 4-year high. Companies are consistently out there announcing layoffs. Verizon, 13,000 employees they just announced yesterday. But remember, you were investing in the market for fundamentals. And fundamentals, at least on the corporate balance sheet, is still strong. That name that a number of you can't pronounce came out with exceptional earnings this week. And at one point was up 5% just yesterday in the session. But by the end of the day, and as of this morning, it is down 10. What's going on? Did somebody yell fire in the theater and all the FOMO stocks took a beating? The answer is yes. Where have you heard that before? Right here in this very blog. If you bought these names because AI always has to go up, you're looking at a balance on these positions down 10 to 15%. And I'm not telling you that these fundamentals aren't strong and that a year from now, maybe those numbers and those prices will be up. But I am suggesting this, and I will continue to say this. Rebalance your portfolios. Do not chase these names because you're feeling the pain this morning. As of this morning, Friday morning, the market is down 4.5% for the week, but who knows what this afternoon will bring. I continue to believe that you buy on dips because fundamentals on the balance sheet is still strong. The Fed will continue to cut interest rates. Again, in my opinion, think long term. And here's what to look for next week. So we have a holiday-shortened trading week. I do believe that the volatility will go down and that the Fed governors will go out there and say, you know what? I think it is time to lower interest rates again when they meet in December. And that will assuage the market. Buy the dips. And for those of you out there that have CDs that are maturing, if you have over 12 to 18 months of expenses in cash in CDs, I suggest you look at alternatives. On this blog, we discussed that when the Fed lowers interest rates, those CD rates come down too. You're probably shocked at where those rates are now versus when you took them out 6 to 12 months ago. Consult your local financial advisor for more details. Here's your personal finance tip of the week. In your taxable account, non-qualified account, not the IRAs, in those non-qualified accounts, look for losses. How can losses be beneficial to you? They can offset gains. If you sell those positions now, you need to wait 30 days to repurchase it. It's called the wash sale. So do it now. Don't wait until the end of December when a number of other investors will be doing so, because you can buy those names back while they're selling them. They're called the fallen angels. Some of these companies have exceptional fundamentals, but their prices are down for whatever reason. Take those losses. There's no reason for you to be paying more taxes than necessary. Consult your local accountant for more details. So thanks again for checking, and we'll see you next week on the Captain's Blog.